Hi, it's Michael Farr from Farr, Miller, and Washington. The third quarter wasn't bad. It wasn't great. Up just over 1% for the S&P 500. Bonds rallied and they performed a little bit more strongly with the yield on the 10-year Treasury falling to around 2.5%, slightly below. So overall, not bad. It felt like markets in this big rally we've been having have been running out of gas a bit. We've also seen through 2014 more speculative stocks do better. More speculative issues, those issues with lower debt quality ratings of double B and single B and into the C's, those shares, those companies' stocks have performed better. So it's been kind of a risk-on year with markets up about 8% so far. As we begin October, we're seeing geopolitical turmoil around the world. We still haven't finished with whatever is going on in Ukraine. We certainly have Syria and other places of great concern. We're concerned about the European economy and the effects of the trade sanctions with Russia on those very weak and struggling economies throughout Europe. You know, we've said that we believe Western Europe will likely go into recession as a result. The Federal Reserve remains on course to end their bond buying program at the end of this month and beginning of November. Now they're trying to judge and warn markets about how soon they're going to actually talk about raising rates and when we might see a rate hike in the Fed's discount rate and overnight rate. So, uncertainty, nothing's wrong yet. I wrote our quarterly newsletter with a good deal of help from my friend Keith Davis, who's been with the firm, who's a partner with the firm for 11 or 12 years now, absolutely brilliant guy. And I began by saying nobody, with a quotation, nobody shoots Santa Claus. And no matter how thin you slice it, it's still baloney. This is a market that has been driven, we believe, by a lot of liquidity, low interest rates, artificially low interest rates, and a lot of monetary stimulus. We're still waiting for that organic consumer to come up and step up and purchase and have that demand drive an economic expansion. We haven't seen that yet, and maybe we're going to get enough momentum and enough traction where we will. So, as we watch this whole show kind of work itself out, our advice is to be cautious, to remain defensive. If you need help, if you need some hand-holding, if you want to review your strategy or your family strategy, give us a call at Farr, Miller, and Washington. Thanks for tuning in again this week. Look forward to talking to you next week. I'm Michael Farr.